China's disappointing GDP numbers for the second quarter led several U.S. banks to cut their forecasts for the nation's full-year growth as China struggles to move ahead in its post-COVID economic recovery. Ben Eisen is still with us, Wall Street Journal reporter. So as we're looking at sort of the big economic picture and we're looking at China, how should we be sort of framing that issue?
You know, it's interesting that we're now sort of talking about the global economy when transferring, you know, right after talking about the big bank earnings, because the big bank earnings have sort of presented this picture of this, you know, possible soft landing in the U.S., but that's really not what we're seeing in a lot of other countries. So, right, China had these very disappointing GDP numbers. The euro area slid into recession earlier this year. The rest of the world isn't looking as good as the U.S. is looking right now. So there is kind of this disconnect that we're seeing, you know, as we look at kind of just all of the events that we've had, how they're weighing on various countries. So it's good to be the U.S. economy right now, and less so other parts of the world.
And Ben, there was a recent Goldman report basically downgrading some Chinese banks. What is the expectation that we're going to see a downgraded Agricultural Bank of China, Commercial Bank of China, and the list goes on? What is the expectation that we would see about exposure and kind of potential pullback of exposure in U.S. banks from China?
You know, it's really hard to say right now. You know, I point to what Jamie Dimon said when he was in China a few months ago, that you know, he kind of took the language that U.S. officials have taken, that there's not sort of a decoupling between the U.S. and China. It's more of sort of a more realistic outlook on the bank, on the country itself. So a lot of these banks are very committed to being in China. Their relationship just might look a little bit different than it has in the past.
Ben, good to see you. Ben Eisen, Wall Street Journal reporter. Thanks.